Hey guys, welcome back to the channel. As always, I'm going to kick it off with Bitcoin, altcoins, real estate cycle, and some stock market talk. Now in this video today, I want to save you time and money. The big emphasis and focus for today's video is the cycle. Bitcoin, and of course altcoins, and the real estate cycle. I was talking with my accountant today, actually, just about his clientele and the sort of money that is moving through the system at this point. A little bit on that a little bit later, just with the real estate cycle. But first, make it really simple, nice and quick. Bitcoin right now is obviously pretty damn boring, trading between 60 and 65. The simple thing to look at here, of course, according to my analysis, I use Gann analysis, G-A-N-N, if you want to research it for yourself. Gann analysis, we are looking at swings and 50% levels primarily. Now there you can go down massive rabbit holes when it comes to Gann analysis, but to keep it nice and simple, the 50% level is at 65,000, depending on the exchange, maybe 65.5, and you've got some pretty significant weekly swing tops, roughly around that 65 grand level. So to make it really simple, unless Bitcoin gets over $65,000, we don't need to get too excited, or at least the bulls don't need to get too excited. Now to the downside, you've got a swing bottom there at 56,500, the 50% level on that entire range, going from the ETF correction low at 38.5 to the top at 73,800, so the current all-time high. You got that range, split that in half, your number is at 56K. So while we remain above that level, still rosy as well. Now, in terms to the downside, we've got a little bit of support there lining up at 60K. It's on the daily, it's nothing like the 56K support, but unless Bitcoin breaks from 60K to the downside, obviously, then again, no need to get too excited about any sort of major corrections coming up. Bitcoin's done a 23.3% correction. It's pulled back 17 grand top to low, 73 to 56. And it's basically just boring now. It's boring out the participants or the market traders, investors who got in late, the March top. And essentially, you can see the volumes dry up on the exchanges. You can see the volume dry up on the ETF flows. So, money going in and out there. And if you are interested, which I'm very much interested, which you don't get access to this information, and for some reason people get a little bit triggered by it, by talking about it, it's views and subscribers on YouTube. It's very heavily retail based on YouTube, and of course Bitcoin and cryptos are very much retail based as well. And right now you can definitely see all the volumes drying up there too. Any of the major channels, I keep a track of it. I think it's important to watch because you can see whether you're getting a flow of new people coming in or the same people. I'm the same person. You might be the same person from 2-3 years ago when it comes to investing. But you definitely want to see some more new market participants coming in. And I don't think we're seeing that. You might think differently, that's okay. But yeah, in terms of the major channels that you would look at, anything, it's over 700,000, 500,000, the views have definitely dropped off a lot. No matter what they're doing, whether they're putting warnings and caution in the title or big headings and, fancy thumbnails or even just basic stuff, it really has dropped off a lot since, for the last 2 months, since around those peaks. So that's all dropped off. Google Trends has dropped off as well. And essentially what I'm saying is don't make the mistake of not watching the market at this time when it's boring. This is the easiest time to be in the market because nothing is going on. When something is going on, it's not easy because you are fighting with your emotions, whether it's, should I have bought before? Should I have sold now? Is it too late? Am I going to get enough gains? Sort of getting angry at a lot of people online or wherever it might be. I think those are the hardest times when the bull market really kicks off. So for now, while we're in this trading range between 60 and 65, to me, it's basically a neutral zone. Neutral meaning I don't need to be overly bullish or bearish because it's in a trading range and it keeps getting tighter. We've hit all those 50% levels, basically all the support and resistance. So that's as simple as I can make it for BTC. A break of 60K, sure, get a little bit more bearish, start to load up a bit more. If it breaks 65 and holds above there for multiple days, then maybe we've seen that low. Maybe the low was $56,500. We don't have confirmation of that yet. Now, I guess the next thing that comes up for people with the, regards to the price of BTC is a break of 65k, some might still be expecting lower prices. As I've talked about, my analysis shows a break and consolidation above that level. You're really putting the probabilities against yourself if you think there's going to be lower prices. This was the same thing that happened when Bitcoin broke through 32,000 back last year, and it started to climb, and you got a lot of, I don't know, traders and pro traders and all this sort of crap on YouTube that kept trying to short Bitcoin all the way up. You might know them, continue to short it all the way up, but they don't have anything in their toolbox to tell them when the trend has changed. They just keep looking at random lines on a chart, which I guess most people think that's what TA is, and it's definitely not. It's not random lines on a chart, but a lot of people make it look like that. And, well, you know, they're the ones that continue to short Bitcoin all the way up. Essentially, you need to understand, well, in your analysis, it's important to have levels where you would show this is a clear change in trend, and I'm an idiot if I keep going against the market. To me, 65k is that number right now. Things change, of course, just like moving averages change and RSIs change. It never stays put. It's always moving. So 65, I've talked about that long enough. And at the end of the day, it is boring. That's what it is. Well, I can't sugarcoat it anymore. But in terms of altcoins, it's not really a but. So therefore, with altcoins, we've got an opportunity to be getting into the strong ones. I've talked about that many times on the channel, so make sure you are subscribed. If you are new to the channel and you've stayed with me this long, thanks again. I'm just doing an update here on beautiful Burleigh Beach this afternoon, as I've had a pretty long day. And this one's really just to give you a bit of an update for the markets. Hit the like button. Let's go for 3,000. See if we can do it in this quiet time. 3,000 likes. Thanks, guys. And essentially with the altcoins, we've looked at some that are strong. Essentially, you just want to look for stuff that is putting in higher lows and not breaking down. That's simple as it is. I've talked about Render, Pepe put in a new all-time high. That's crazy. Watch the 50% and watch the swing bottoms as well. I'll do that on the charts in future videos, but easily just watch those middle levels. If they start to break down from that, and then you see Bitcoin and the rest of the market going up, that might mean that their run is over. So, just pay attention to where they sit on the chart and not just get too hyped up in the communities and all that sort of stuff. So I think there's an opportunity in altcoins right now. I think there's an opportunity for Bitcoin, even if it goes lower. If it's at 62 now, it drops to 56. I don't know if it does. It's not that big of a deal. You're not buying in at 74. And that's only if you think there is a longer term view on this as well, that it's going to go to whatever, maybe you're going to put on 50%, 100%, who knows from this point, honestly. But I think there's further upside to go for Bitcoin and the crypto market. So in terms of stocks, they've headed up, and I want to get into the real estate quickly for my update here. Stocks, they've continued up again. It's part of the cycle. I am still of the firm belief that we're going to see higher prices by the end of the year for stock markets, S&P 500, NASDAQ, and the strong stocks are leading the charge. Your strong tech stocks are leading the charge. One of the weak ones, if you just look at the chart, not my opinion, and it offends people because it has a very strong community of, random people online, Tesla. Tesla is a weak tech stock, weak. And people say, well, you should buy low and sell high. Yes, but you don't want to buy weak stuff when the rest of the market is strong. So I would look for a reversal at some point or a breakout for Tesla to confirm that it is going to get into the strong basket. Okay. Anyway, that tech stocks aside, and we've had a bit of that come up lately. Real estate cycle now. Real estate cycle still up. So in terms of the conversation I was having with my accountant just before, so I had a meeting. End of financial year is coming up here for Australians. We do that middle of the year if you guys are watching from overseas, and really just looking at the money that's coming into the system. The money that's coming in, there is a lot, and he just as one side note, I take things and try to picture my own, put my own theories together and then see if it happens objectively on the chart. So, I'm taking information in from everywhere and then trying to find ways to confirm or deny it. So one theory here, it's not a gospel or anything, but you've got a lot of money coming into the system and a lot from boomers. You might have heard this, right? A lot from boomers, and they're not necessarily needing to get loans out to get real estate. So you're seeing real estate prices going up. Australia, UK, the US, major economic leaders in the world. And so they put interest rates up. And it's not really slowing things down because the boomers have got a lot of equity in their property already, or maybe in their stock portfolios. And so they can just keep taking from that equity and keep putting it into other real estate investments. Eventually, it turns to shit. And if they are unaware, which the majority, I believe, will be very, very unaware, that their investments could ever go down and they get too over leveraged by taking out too much equity from their properties and then ending up in some pretty heavy debt. Maybe they go down to 50% or 60% or 80%, I don't know. Then that's when things really start to turn down. But from what, the discussion that we were having is that there's still a fair bit of equity out there for to come into the markets to keep propping up real estate prices, and interest rates don't necessarily have an effect on, or as much of an effect on the real estate environment at this point in time, based on something like that, based on that type of theory, where if there's still a lot of equity that's being used that is not borrowed from the bank, so it's not credit created, then the interest rate's not going to do that much. There's obviously going to be effects in other areas of life, but that might be a particular reason why it's not having such an effect at this stage, right? And that's all we're just looking at now as an idea. So what I would say to that, and is basically my message quite often, is don't get drawn into the markets too late when you're seeing these peaks take place and the price is really starting to skyrocket. There's still a bit of fear in the market from what I can see, and people believing that it's too overbought and it has to come down. Typically around tops, you'll see more people, or the majority, start to think that it's impossible. That happens in the stock market, it happens in Bitcoin, happens in altcoins. The majority think it's almost impossible for the markets to come down because of XYZ. Remember, go back 2 months ago to March for Bitcoin, and the majority thought Bitcoin couldn't come down because the ETFs were here buying everything. I mean, sure, it hasn't come down a lot, but to me at least, it proves the point that it can happen when the masses are thinking otherwise. They're thinking it's not possible because of ETFs, because we hadn't had the halving yet. And a lot of people say, well, there's half of the amount of Bitcoin coming out, it's going to have to collapse. And you're like, well, if the supply drops, then why would it? If the demand drops equal to the supply or more, then it's not going to go up. It's just supply demand. It's not only supply or not only demand. So yeah, that's my takeaway from that in terms of the cycle. And the big one with that is just don't get caught out buying next year, I think. I think 2025 is probably going to be far too late to be buying into cryptos, real estate, stock markets. That's not to say that it's the top. I'm just saying there's probably not much meat left in the deal to get those returns that would be worth the risk of putting money down. And you can start to see how that occurs with what's going on with the governments now handing out more money for real estate, with credit becoming easier to obtain, more money flowing into the systems, so on and so forth. So I'm going to continue to follow this up on the channel day by day, week by week. Thanks again for joining me. This was just a nice little update that we can have a chat here on the beach. Hit the like and subscribe to the channel. And of course, links in the description for TIA Premium and the free report that has gone out this week. So check your inboxes for that as well. See you guys at the next video. Have a fantastic time, and hopefully I'll catch you again out here on the beach. Till then, take care and peace out.